Ski.
And we are so live.
It went out.
You went out. You gotta go. You gotta bring it down a few notches.
I can't. Like, it messes up the vibe. It has to be up there.
Does it though? I'm just kidding. What's good, Jolie? How are you doing today?
I'm feeling myself. I don't know about you, but
well, wait. What is that?
Oh, this is artisanal ginger Sprite.
Who is it made by?
It's made by me. I sourced all the ingredients myself. I did use the soda stream, but that is only for the carbonation factor.
Okay. And you got this whole vibe here. Like, can we talk about it, or is it still under wraps?
What do you want to know?
I mean, like, for example, you got the is that the color maize or is it gold? I just
goldenrod. This is a goldenrod yellow.
Okay, and then this is jade, right?
This is jade. Shout out to the optical goddess, aka the eyewear love affair.
Okay.
She styles all of my eyewear. These are all prescription glasses. I don't know how many prescription glasses I have, but she is responsible for all the super dope ones.
Okay.
And then my hair is done by Miss Felicia, aka From Impeccable Artistry. And then, it's a whole team. You got to have a whole team for creative expression, and my favorite wardrobe stylist, Cami Parrish, she puts all my looks together, and I just pick which one I want to wear for whatever day.
Well, all right. Well, guess who is cousin number one today?
Who is cousin number one today?
I'm just going to give you a hint. Back to back.
I mean, I know who they are. Let me see. Wait, no, I don't. Back to back. Is Vic again?
It is Vic. Did you look at the list?
I swear to goodness, I did not look at it. I did not look.
All right. What's good, everybody? I am Mark Monroe, and I am accompanied by my co-host, co-producer, and one of my BFFs in the world, the wonderful
Lynn GC in the place to be. Okay, wait, time out, Mark. While we were talking, like legit, I forgot we were on YouTube. I thought we were on like Zoom FaceTime. Like I totally forgot that we were on YouTube.
It'd be like this sometimes when you're having so much fun and everything else, and we get to talk about the things that we love. I mean, it just doesn't feel like work. It just feels like fun, like an everyday thing. So awesome. What's up, everybody? If you haven't subscribed yet, go ahead and hit that subscribe button down below. It's just 2 seconds of your life that can also possibly change it, just like, any type of market swing out there. And then on top of that, go ahead and hit that like button if you like the content and if you like the message and if you want to be a part and if you like the movement and what we stand for, go ahead and hit the like button. If you think that there's room for improvement, that we can do better, that's okay. You can hit the dislike button, but please tell us why. I mean, because we always want to get better. And then on top of that, if you want to be in the know, go ahead and hit that bell. That makes you AKA a part of the Cool Kid Squad or the Notification Squad. So y'all, it's been a lot going on, a whole lot of stuff like just out there. And I think that we're going to bring some friends along with us. So, you never know who may come knocking on at the door today, because we may need some friends to come in and to kind of woo-saw, the cousins and everything else. I've been getting tons of messages and folks like, hey, what does all this mean and everything else? Just remember, if you ever saw my tweet, I think it was yesterday or the day before that, when we typically go through these correction periods, I mean, honestly, okay. I mean, This is what you signed up for. You go through a 2-year-long position. There's going to be some pain in the process, but you'll be okay. We'll also explain some of the things in which that you're hearing in the news, in which that they're probably not doing a very good job of explaining to you. But before I even go any further, Jolene, let's just go ahead and knock out some of the things, because I know that you got a lot. So I hand it over to you.
What's up, y'all? It's Hot Take Thursday. I almost said Straight Talk Tuesday, but today is Hot Take Thursday. And I'm Jolene GC in the place to be. And I would love to talk to you about this whack market. No, just kidding about this market. The Dow was down negative 345.95 points. S&P 500 was down negative or 51.25 points. The NASDAQ, y'all, down negative 274.28 points. The VIX creeping back up at 28.57, and the US 10-year Treasury is at 1.5. So, yeah, we're going to get into that because I swear Brother Jerome said one word, inflation, spooked the markets for real. So for our sector performance, we track the top, or we track 11 sectors because that's how many there are. And we track the top 3 and the bottom 3. So for the top 3, we have energy, communication services, and utilities. And then for the bottom 3, another time, y'all, this is the second time I'm saying this. I don't know what happened on Wednesday. I was resting all day, but today, just like on Tuesday, consumer discretionary, materials, and tech. And then for our pick performance, you can find our picks, aka the SIPs, on our Instagram page at that come up series. And this is the first time in the come up series history that there are 0 52-week highs, y'all. There was TBT was in the green as number 1. Microsoft was number 2, and then JP Morgan was number 3. And then for the bottom 3, we have C, that's SE, or ticker symbol SE, but the company is SEA. And then we have CWeb, and then we have SDGR. All of those were the bottom 3. And I just think we just need to get right into the, who do we have here?
What's good?
Hey.
You never know who's going to pop up.
Glad you're here. He hella just pulled up. Like, what's good?
Hey, he is here for it.
What's going on?
Just in time.
You are just in time, but I think that there's gonna be somebody else popping in a little bit also. So but thank you, Q, for dropping by because we got a lot that's on our list. Like there's a lot of cousins asking a lot of questions, and I felt like it would only be necessary if we bring, some of the family along with us in order to answer. So, Jolene, by all means, take it away.
For Black History, Q. So, shout out to you. All right, so today, hold on, I need to. How T will be putting on his little specs. Mine are already on, but I just need to straighten them out.
In the honor of Tebow.
Yes. All right, here we go. Let's give out a Black History birthday shout out to the ancestors. And today it is inventor Garrett A. Morgan, who was born on March 4th, 1877. He was born in Paris, Kentucky. I did not know there was a Paris, Kentucky. He is best known as the inventor of the gas mask and the traffic signal. He is also renowned for a heroic rescue in which he used his hood to save workers trapped in a tunnel system filled with fumes. He is credited as the first African-American to own an automobile. Big birthday shout out to Brother Garrett E. Morgan. And I should say that this is the Black First edition. So we have we have a shero and a hero for first. So for our shero is Bessie Coleman. She lived from 1892 to 1926. Despite being the first licensed Black pilot in the world, Coleman wasn't recognized as a pioneer in aviation until after her death. Though history has favored Amelia Earhart or the Wright brothers, Coleman, who went to flight school in France in 1919, that was the year my grandpa was born actually, paved the way for a new generation of diverse flyers like the Tuskegee Airmen, Blackbirds, and Flying Hobos. Here is a quote. "If I can create a minimum of my plans and desires, there shall be no regrets." And then she further says, when it comes to experience, that most brutal of teachers, but you learn. My God, do you learn? That is so applicable to these markets, y'all. You all are spending time in the market and getting a feel for these ups and downs. And as you spend more time in the market, you're able to withstand, the ebbs and flow. Up next, we have one of your favorites, Jesse Owens, 1913 to 1980. Owens was a track and field athlete, just like Mark, who set a world record in the long jump at the 1936 Olympic Games in Berlin and went unrivaled for 25 years. He won 4 gold medals at the Olympics that year in the 100 and 200 meter dashes. along with the 100-meter relay and other events off the track. In 1976, Owens received the Presidential Medal of Freedom and was posthumously awarded the Congressional Gold Medal in 1990. Here are a couple of quotes from our brother Jesse Owens. "The battles that count aren't the ones for gold medals. The struggles within yourself, the invisible, inevitable battles inside all of us. That's where it's at." And then lastly, we all have dreams, but in order to make dreams come into reality, it takes an awful lot of determination, dedication, self-discipline, and effort. Wise words from our ancestors. Shout out to any of you cousins who have had a first in your life. Maybe this is the first time anyone in your family is investing. So flame yourself up in the comments. I want to hear who just got into the market recently over maybe these past couple of months or maybe just this year. Mark, passing it back to you, brother.
I know, like, well, I mean, it's been a very, very interesting set of days. And so, honestly, I know that you're going to be coming in hot with some of these questions. And I was like, maybe it would help to bring some folks alongside with me. So today, not only do you have me, but you also have somebody which that is like mind of the markets in the sense from the institutional side, but also with a strong fundamental background. But you know what, Jolene, I feel like we're missing something. I feel like this is missing an ingredient. In order to have dope fundamentals, quantitative analysis, and qualitative analysis, we're missing one thing in order for this to be legendary. And today is all about separating the game from the truth. So, I mean, do you think that they'll show up? Do you think that they'll knock on the door, or do you think that they're even here? I need a technicals person. I think we need a technical. What? We got it, technicals. All right. Now this is gonna be interesting though, because okay. See, Q is over here taking sips. He's like, "Yo, let's get hydrated." All right, so.
To get ready. Gotta get ready.
Yeah. Okay, so this is gonna be popping. So Zay, first off, I mean, I think that I've done you a huge disservice there because I feel like you need to tell a little bit of your story. So if you can, just give us a quick 2 minutes about your story and how is it that you became the trader/investor that you are today, sir.
All right, so quick 2-minute breakdown. It all started when I hit rock bottom about 3.5 years ago. A lot of people have heard me tell my story. So just for those who haven't or aren't familiar with it, I come from a line of gamblers and it ran in my blood. And, I was out in the streets doing things I wasn't supposed to be doing. And so long story short, I had to come to a realization that wasn't the way to build real wealth. So, I got back to the basics of what I loved and channeled my energy into investing and trading. That's something I always had a passion for. So I started investing back in 2012 and really trading since about 2017. And so it was just like I needed to redirect my energies into something positive and where I could use my natural, things that I was good at to really help me excel. So that's, short end of how I got into like investing and trading and just my, my journey. Now there's a much longer story. We'll save that for another day.
Yeah, we got another episode.
But, long story short, hit rock bottom. And then I started to just claw away. I know some people have followed me in my previous journey where me and my wife were having a debt-free journey and stuff. So, that all started around 2017, 2018. And so now I'm here now.
All right. And I hear that you're quite the dude when it comes to technicals, my brother.
I mean, I'm trying, I try a little, I try to do a little something, help the people out.
Yeah, that's modesty right there, y'all. That's modesty. I'm here for it. Now we also got somebody else on the other side of the aisle here. We got our brother Q here in the building. Q, can you give for the folks that may not know who you are, please tell them a little bit about who you are. Just a quick 2 minutes.
Quick 2 minutes. First of all, I'm the big cousin. You know that. Sports background. I guess you could say I Vince Vaughn'd my way into the finance industry by crashing parties as a 21-year-old kid looking for liquor and free food and walked away from that with a career and a love for knowledge and empowering my people. So really, for the first 22 years of my life, I thought basketball was the end-all be-all until I was introduced to a world where I realized that I can make basketball money without getting my body touched. And I realized that I could learn information and change the trajectory of my family, and then ultimately change the trajectory of my people. So, my pursuit went from paper to passion, in a quick 2-minute synopsis.
All right. All right. So Jolene, you got questions, right?
Yeah, so mainly on Thursdays, sometimes on Tuesdays, depends on how generous I'm feeling. But mainly on Thursdays, I set out a little post on my Instagram, and that's all the cousins' opportunity to ask questions or get their questions answered live. So let's see what we have. First, let's start with Brother Jerome. Now, did you guys read that report in the Wall Street Journal or hear about what Brother Jerome said?
Yes.
So Brother Jerome said the inflation word, and that's what spooked the markets, right? So we have some questions because we have cousins that are, for lack of a better phrase, they're freaking out. Yep. So what light can you shed on Brother Jerome's comments about inflation and the Fed's commitment to keeping rates where they're at or not raising them?
Okay, so I'm gonna let Hugh take this first, and then essentially I'm gonna let Zay follow up. And if there's any sauce left over, then I may take it. I feel like they got this.
I think you're looking at the tale of two tales, right? And you think that the market, and you see them and you say, okay, we're not going to raise rates, and the market's saying we don't believe you, right? And I think right now we're at an impasse because there is a level of thematic and narrative trading, and it happens at all levels, right? It happens at the retail level, it happens at the institutional level, and it happens at the mega cap level, where sometimes the story can be overtold or undertold. And I think the story of our markets have been overtold, right? Especially in the tech industry. And so when that inflation word comes around, people tend to freak out and go, oh my God, the sky is falling, right? And my retort to that is that even if you thought that inflation was going to be a thing, I want you to think about what your pockets looked like 10 years ago, 20 years ago, right? So if you had your keys, you had your wallet, if you were in the dark or something like that, you're a mechanic, you have a flashlight, maybe you had a little joint, little Swiss Army knife, a little calculator, something of that nature, right? And you worry about inflation. Your cell phone has everything that you need on it. So it's basically almost deflationary because all these things that you carry around, you pay extra money for. Remember, you used to pay for a GPS, you had to go to Best Buy or Circuit City and spend $100. That's in your phone for free. So when you start to look at the items that you use on an everyday basis and realize how deflationary they are because they serve more than one purpose. And so even if inflation was to be a thing, you can look around at your world and say, you know what, it really can't be because I have a multitude of things in my room or my life that serve a multitude of purposes that actually help keep money in my pocket. And I think the market got spooked by that word because we've been told the story about how tech is changing and revolutionizing things, and these companies are overvalued, and these PE ratios are too high, and the valuations don't match up. And we've heard the Tesla stories and the Amazon stories. So I think you have to stay true to your thesis, right? And I think I trust the Fed. Through this whole process, they've been honest and truthful. So I have to give them the benefit of the doubt through the process. And I think, ushers back to the 7 teachers, right? Trust the process. As an investor at any level and, retail, institutional, I tend to trust the process, right? And you bought these names in tech and semis and consumer discretionary for a reason. And that story plays out sometimes longer than you think it will, right? That story for us is we're in the year 1 of a 6-year bull market, right? And I think we have to acknowledge that. Okay, so, we're climbing up that mountain. And I think that you have to realize the climb is not as easy as getting to the top you think it is, right? Last year was easy for everybody. Everybody was making money. We was lit last year. And now you got to work a little harder, right? Because what happens is when you're a good team, guess what? The other teams know you're good now. So now you get everybody's best punch. The market knows retail investors are good now. They know that you're well-informed. They know that you guys are smarter, you're better. And guess what the market's doing? They're punching you harder than they did last year because they realized they couldn't swing on you last year. So this is your job to get your Floyd Mayweather on and hit him with the keen, right? And continue on your path to success and do not allow them to make you sell out of great positions because they're scared of an overtold story.
All right, Zay, what you got? What are your thoughts about it, sir?
All right. So first, man, it's hard to follow that up, but I think the value I can add to the story Q just gave is perspective of far as the whole inflation thing is just a short-term flash. So a lot of people are being reactionary to the inflation word, and we talked about this a little bit earlier, but we've been hearing about it for weeks now. Eventually, the market is going to become numb to it. We've heard Jerome Powell say multiple times we are a long way away from it. He's not worried, so therefore we shouldn't be worried. I think the narrative is that as inflation goes up into what you guys just spoke on, cost of goods goes up. Mm-hmm. So when we think about our growth companies, ultimately that could impact the bottom line. So last year, a lot of growth companies had these crazy runs, and ultimately people are saying, hey, we know you have these future earnings, but we need to see you grow into it or catch up. And so inflation is scaring people because they're like, okay, if we have inflation and cost of goods go up, then ultimately those bottom lines are hurt. But I think the big picture, and Q, I mean, hell of a gym, bro. That bull market there. It's like I heard somebody say earlier, we're just in a cool off period of a secular bull run. And ultimately, like, you're going to look back and say, I should have bought at that point in time. So for me, the value I would add is that, like, don't let this short-term blip scare you out of your long-term positions. So I think that's the value I can add to that. Because
I mean, Q like just took it out of the park.
Right. Like,
so again, that was also a home run.
All this
right.
People are throwing up in the chat DMV strong. So I think that they're definitely agreeing and rocking with what both of you guys are saying, but especially you too, Zay. So thank you too on that one. I think a little bit to shed a little light on it, because a lot of folks are kind of like just trying to understand what does that mean when we think about like we hear this thing about yields, like the yield is increasing. And a lot of folks are kind of like assuming that that is also attached to rates, right? So I think that one of the things that they're a little different when we think about yield versus interest. So for example, when we look at the yield, that's more so in the sense of like the profit, versus the interest rate is like, okay, hey, if I'm a bank, that's ultimately what I'm going to be able to charge at, which means like kind of like consider the cost of the money that you borrow. So when you see, like, for example, what Q has said, when it comes to the borrowing of a lot of these companies that have been like just crushing it out there in the market, especially a lot of your tech companies, when you see that those rates or when those yields start to increase, now that puts some temporary short-term pressure on those companies, because now it now costs money to borrow. Whereas versus 2020, if you borrowed money, I mean, interest rates were at zero, yields were pretty much flat. So essentially it was like, okay, I borrow money, $100. It's literally, it doesn't cost me anything to really borrow money at this point in time. It's easy to get cash. But now it makes it a little bit more tougher to get cash, or not tougher, but it makes it more costly to get cash. So let's say if that yield is increasing, then essentially, okay, hey, well, now it's like you're going to have to start, that $100 that you borrow is going to also have some strings attached to it. And when we think about the interest rates for the consumer market, I mean, that's where people are saying, are we going to raise interest rates from the Fed? And the Fed is telling you, like Hugh says, no. And inflation, no. So now, like he said, there's an impasse in which that now, since there's an impasse, you see people selling when it comes to the bond market. So they're selling in stock and they're selling in bonds, like the high flying stocks, and then they're selling in the bond market. So what does that do? When they sell bonds, then essentially, or sell treasuries, then that makes the yield go higher.
So if we can back it up a bit and give context to the cousins, there have been a lot of messages that I've received with freakouts.
Yes.
So some of these questions, well, one, let's back it up. And first, as a refresher, can you define what a pullback is and what a correction is, and then what a crash is?
Sure. I think this is like a technical analysis question, I think. So let's hand this one over to Zay.
Yes, I was waiting for this question. All right. So let's put some things into perspective, right? So a pullback, that's going to be 1 to 5% and usually will last 3 to 5 days. So a week, put it that way, right? When you think about a correction, that could be anywhere from 10 to the high part of, 19%. And like, that's kind of pushing it. And that can last typically anywhere from 14 to 21 days. 2 to 3 weeks is what you see a correction. Now a crash, that's going to be, and correct me if I'm wrong here, Mark, that's like when you lose 30%, but it's also over like 2 consecutive quarters. Now, what we had in March was like the fastest crash ever on record. I mean, that was literally, you could say, top of January down to the end of March. And that was, the 30%. It usually doesn't happen that fast. And so when people say a crash, I laugh because it's like, do you really think the market is going to fall 30% again? To put things into perspective, you typically have a crash every, say, decade or so, maybe 7 to 10 years, where the market does a reset of roughly 30, 40%. Mm-hmm. So when you think about a pullback, a correction, and a crash, you really have to be very careful of how you label it, which is why when I talk to people or when I tell people, I'm like, let's be mindful about saying the market is crashing. Mm-hmm. I think another thing I would just add to that is, and I know a lot of people who watch me or follow me, they always ask this, the market could technically correct, meaning it itself drops 10 to 15%. And you can have individual companies who, in our terms, crash, meaning they correct 30% or more. Mm-hmm. I think Mark could probably speak to a little bit better, but he gave me a guide of, our bigger mega cap companies, their corrections, pullbacks, and crashes are not going to be as vicious as your small cap, mid cap stocks. So a lot of that has to be put into perspective when you talk about a pullback, a correction, and a crash.
Yeah, 100%. And I'll add some sauce onto that. And then Q, there's also a question just for clarification. Actually, let's do that. The clarification, I guess some of the cousins want to know. Did you mention 6 year bull market run? And we're in the beginning stages of that?
Yeah, like often, especially when you get a new presidency and you have what we have with stimulus packages coming in, right? An influx of capital, we can ride that wave from an economic standpoint for at least 6 years, right? From a standpoint. So I think obviously the first 100 days of our presidency is really important. They've done a great job. We are ahead of the curve when it comes to the COVID vaccine. I don't know if I can say the C word. I think we haven't dropped our infrastructure package as of yet. And that's to come. And I think that once we start to get the wheels moving in the economy, people get money in their hands, I think that changes confidence. I think once we change confidence, the tone changes, perspective changes, how people trade, and then how just as a consumer, how you feel, right? People have been spending money without having money. So wait until we get back outside, right? Wait until everything is a little bit more normalized and you can travel again. I mean, it's going to be, I can imagine, what the vacation spots are going to look like and the rates look like at the hotels and airlines when things get normal. I think you have to kind of have a future vision, past this. It's hard sometimes because all they do is show you red on TV. So sometimes it's hard to kind of siphon your mind through that. But yeah, so you're looking at a new presidency, you're looking at an influx of cash, and you're looking at supply chains. Let's talk about semis, right, that have to be corrected, and relationships need to be repaired with China and things of that nature. So there are a lot of positive tailwinds coming our way in the near future. I think you have to make it through the headwinds, right? And this is a headwind we have to make it through. But on the back end of that, I've never heard anybody on the back end of a pullback or whatever you want to call a correction say, damn, I shouldn't have bought that much. I always hear, I should have bought more, man. I was thinking. And so I think you have to hold that in your head as you kind of watch these entertainment platforms, is what I'll call them.
I do want to add into that though. It's important that as people are, saying, are getting in their mind like this is, a good deal. Please don't be out there spending money that you can't afford to to invest, meaning that if you need it in the short term or you think you're going to need it in the short term, do not invest it.
Right.
Leave it in your bank account so that you can access it should you need to. Otherwise, you're gambling. We're not that way.
I always tell folks, don't invest money that you're not willing to lose. I mean, that's one of the biggest things. It doesn't mean that you're going to lose capital, but it's just more so in the sense that it kind of like puts it into perspective. If you know that you need this capital in order to pay your bills and keep your lights on and everything else and put food on the table, then don't use that. Because ultimately you're putting yourself at a huge disadvantage and you're gambling, like Jolene had said. But the idea here is to be strategic, use the money that essentially that just would be sitting there. And honestly, you would not even be thinking twice about it because of the fact that you would be doing your day-to-day stuff. And that's the money that ultimately that you should be putting to work to ultimately help build towards your future.
Yes, we cannot stress that enough.
To also add to Zay's point, when we talk about correction, because you mentioned a very good point about, like, say, for example, some companies are not always created equal when it comes to going through this process of correction. So, for example, for everybody, just as a heads up, the NASDAQ is an exchange where it's now sitting at, I think, 10%. It's now down 10%. So the NASDAQ is officially just touched in correction territory as of, I think, at market close, or just closed right up above correction territory, which means 10% down from the 52-week high. All right, so with that being in perspective, let's take a tale of two companies. Let's say, for example, you have a Microsoft, and then on the other hand, you have a Tesla. So Microsoft is probably going to correct probably between about 10, 15%, maybe touch bear market territory. Versus Tesla, since it's much more of a more volatile stock, and on top of that, it has a very strong cult following, and on top of that, a lot of institutional money had pumped into the stock early on, and they're ultimately having to rebalance given that Tesla has gone on such an astronomical run. Then now it's like when Tesla corrects, it's not going to correct by 10 to 15%. That company is probably going to correct about anywhere from about 20 to sometimes even close to 40%, which would be the equivalent of, say, for example, to a Microsoft, because of the fact that Microsoft is way more of a larger cap, and on top of that, not very much of a volatile stock versus a Tesla. So when you put that into perspective, when you see a lot of these high-flying volatile stocks, then essentially you can expect more of a pullback in these companies versus in the companies that, in average, they don't really move very much. And I think that we'll get to Microsoft a little bit later, because there were some, untold stories about Microsoft. But, I'm just guessing. Because, mind you, Jolene hasn't told me what we're going to talk about. So there it is.
Okay, so you all feel good about what you have stated for that batch of questions?
Oh, for sure.
All right, now we're gonna move on to some bank life. So,
oh God,
bank life.
We're gonna talk about banks.
Yes.
Oh Lord,
okay.
It's gonna be fun.
Okay, so
I need you to help me play referee here, Jolene.
I know, and this is why, it's Thursday. It's what is it? It's who do you like, Q? Who's your bank, your fintech?
Square, PayPal.
Square, PayPal. Okay, so there was a lot of news about Square, and then you're Goldman Sachs.
Team Goldman Sachs.
Okay. So
I don't have a stick in this fight because you already know what stance I'm on. So, and my team is not even there yet, but I know that everybody's waiting for us to show up.
We know. Okay, so
I ain't wearing the pattern.
But we know where it is, though, Mark. We know where it is. Okay, so Q, there were several things in the news about Square. In particular, I think we may have talked about this on Tuesday, but your hot take, on Square acquiring Tidal, and also having like a bank charter now.
Let me get my conspiracy theorist back real quick.
Okay, go for it.
So I think that Square is very forward thinking. That's one of the reasons why I like them as a company. So to get into the music industry, or just the industry of a creative, I think is going to the way of being more independent and more direct to consumer. And by thinking like that, if I think about the music industry, how many artists are there in the music industry? How many fans do they have separately that are their fans, right? Core fans. Let's take your Futures, your Hoves, your Drakes, right? There's a bunch of people have core fan bases. In a direct-to-consumer world, if those people are putting out merch, music, different kind of things, Patreon type things where you get extra, somebody has to process those payments. Those payments have to come through somewhere. And so by partnering with a company like Tidal, I think is very forward thinking, because you think about what Tidal has done with the touring, right? You can't really tour, but they've been doing these streaming concerts. And so when you think about the content there, you think about music, think about merch, think about all these ways that you can basically bring revenue to the table as an artist or a creative. And that's just not music. I'm sure there's other things, they can do within, TV, different things, but let's just stick with music. I think the Jay-Z partnership is very strategic. Now, Rock Nation is attached to anybody?
Live Nation.
Okay. I ain't got to stick in this fight. This is between y'all.
Hey, I'm Live Nation. Okay.
Rock Nation's attached to Live Nation. Jay-Z's attached to Tidal. He's an intermediary. I think the ultimate play here, and this is speculation on my behalf, so don't take my advice to see a financial advisor, is that the Square play is a play for them to either acquire or work with Live Nation once we get through this pandemic. I think that they understand that touring and people have been in the house all day long for the last year and a half, and they want to get out. They want to see their artists, whether it's a streaming concert or a real concert. And at a real concert, you're selling merch, you're selling food, you're selling CDs, you're selling everything, whatever you could think of, right, at a real concert. So I think it opens the door for a whole segment of payments. Now, if you think about Cash App as a whole, it brings in more payments by itself than all the other worldwide payment systems that you have combined in India and China and different places of that nature. And that's just one belly of the beast. So I think that this sets up a great partnership with an expansive future in a revenue generating area that is way more valuable than the market is giving credit to right now. I think that Spotify, Apple, and those kind of podcast content makers are very aware. Patreon's very aware, but I think everybody else is sleeping. And I think that they're going to backdoor their way into a collaboration or an acquisition of Live Nation and take over a segment of business that nobody else has talked about for the last 2-3 years. Now, on the banking behalf, let's talk about it, Zach. I'm gonna get my pre.
Okay, so let's talk about it. Let's talk about it.
It costs PayPal and Square $20 to acquire a new person on their platform. It takes Cash App $5 to acquire a new person onto their platform. Cash App averages $42 per person on their platform. It took JP Morgan 30 years and 5 mergers to get to 60 million people on their platform. It took Square about 7 years to get 59 million people, PayPal about 10 to get 70 million people on their platform. So if we're looking at platform size, acquisition of client, where a normal traditional investment bank costs them $1,000 per person, and then a consumer bank, it costs them $1,500 per acquisition of a client. How do you compete with scale and pricing over the long term when I already laid out the Live Nation deal? I've already laid out small businesses, and we have somebody that's knocking at the door. They're at the door right now, Zay. They're at the door. They're knocking. They're saying, Goldman, JP, let me in. Let me take that banking business. Mark knows who it is. They come into the party like a Royal Rumble. When you hear the 1, 2, 3, and then the music hits, they hit. So I think that PayPal and Square are leaders of the new school, I like to call them. The bank charter is not going to be your traditional savings or checking. It's going to be more of a business, and it's focused on one thing that I love. You know what I love about it? It's focused on bringing business to women, small business loans to women who are underrepresented in the market. And it brings more opportunity to my sisters that are out there doing their thing. And I love that part. So I think that traditional banks are in trouble from an acquisition cost standpoint, from a scale standpoint, and then from an idea generation standpoint. They are about to get smoked something serious.
So all of that, right, sounds really, really good. Traditional banks are in trouble. But here's why Goldman Sachs is the exception. Not a traditional bank. It's an investment bank. They make the majority of their money off of trading revenue. Okay. Tell me any high net worth person or ultra wealthy person that's gonna start trading on Square's platform. You gonna start moving M's on Square? You gonna cash at and buy your split stocks on Square?
Mark left.
I just don't see that happening. So when we talk about traditional banking services and regional branch services, Square, come on in. That's just going to knock off JP Morgan. You're going to knock off Wells Fargo. You're going to knock off all your traditional banks. But what put Goldman Sachs in a different class is they are not they don't have retail branch banking exposure. Their money is made on trading revenue, right? Let's think about the next 6 years you gave us of a bull market. That's a lot of trading activity. That's a lot of revenue that Goldman Sachs is going to make. And let's also not forget, when these companies go IPO, now mind you, the SPAC bubble is about to burst real soon, so they're going to have to go back to IPO. Mm-hmm. Who underwrites that? It ain't Square. I'm sorry. It's JP Morgan or Goldman Sachs. Hold on, let me finish, because you make a great case. You make a great case, and I'm not knocking. I'm on Square's side. However, I just need people to understand that when you make a case of Square and PayPal coming in and taking over traditional banking services of getting your check deposit or getting, sending money to your friends, that's not Goldman Sachs business. Now, here's the cool part though. Goldman Sachs is working on a transition plan for them to appeal to the younger consumers, right? They have Markets by Goldman Sachs. Now they need some work on that. And I think they got something up the bag. I would love to see Goldman Sachs go out and acquire Robinhood. That'd be a pretty dope, acquisition for them. Also, they did mention that they're going to reopen their cryptocurrency trading desk. Now, I'm going to use something that you gave me against you. If Goldman Sachs can master the Bitcoin game, they keep their relevance, because now you have your high net worth clients getting the exposure they need to Bitcoin, and now they have no reason to leave, and all of their money can be managed in-house. So whether you like it or not, yes, all these Wells Fargo, AQ, you're gonna be looking for another job because Wells Fargo about to go out of business real soon.
Oh,
so,
my God.
Yeah,
Hold on. Time out. That was a hit below the belt. That's 1 point taken.
I'm just saying that Goldman Sachs is, again,
okay.
I love your argument that Square is going to take out traditional banks, because they will. I'm with you. But Goldman Sachs is not a traditional bank. They have a lane of their own. And just, I'm gonna just start this last little one. Let's go back and check the numbers, because men lie, women lie, numbers don't. If we look at what Goldman Sachs has done with their revenue and earnings per share the last, say, 2 to 3 quarters, more than doubled each and every single time.
Okay. Man, retort that real quick. I just have one retort. I loved it. It was phenomenal. You did what I thought you were gonna do. You do your numbers, Zach. I knew you were going to bring up trading revenue. I knew you were going to bring up platforms and trading and stuff like that. But Zay, there's one thing you missed, man.
What I missed?
One thing that you missed. These affluent people, you know what they are? They're old. You know what's coming, Zay? The transfer of wealth. And who is acquiring that wealth?
But you gotta understand. Okay.
Who is acquiring that wealth, young Zay? It is
us.
It's millennial. And
right.
So you tell me, right? When you tell me that Goldman Sachs is looking to appeal to the younger markets, you know what that looks like to me? It looks like the old guy in the club with the Hawaiian shirt, and he got like 2 unbuttoned with the gold chains, and all he does is buy young girl drinks, and the young girls take the drinks and they curve him, right? So when you tell me, that they're gonna do that, you're just presenting the old guy in the club, right? And what's the old guy in the club's success rate? It's very low, right? He spends a lot of money, he leaves, go home by himself, get some pizza, he's back to the crib. So again, I think that in the short term, yes, I think Goldman Sachs is a lovely play. I think that what helps them is a lack of competition. It's a 2-horse race, okay? There's 4 other companies that it don't matter. It's a 2-horse race. So I think they get a lot of the flow because there's no competition. I also assume that people name brand, right? So Goldman Sachs is a name brand you want to hold on to, but I want you to keep an eye on in the next 3 to 5 years, the transition of wealth. And that, because they don't have any traditional bank products, and what has Goldman Sachs been trying to do for the last 2 years?
They've been trying to buy a bank.
Trying to buy a consumer bank because they are well aware that they do not have a consumer arm or a lending arm that will allow them to make money as the transition of wealth happens and money deposits come out the bank. And when money deposits come out the bank, you know what happens? You can't do certain trades. You can't underwrite certain things because your cap requirements are not met. So I think that in the short term, I am right there with you, Zay. But like I said, the leaders of the new school are coming, and that's square.
No, okay, so hold on. Let me.
All right, so then
hold on,
you get your last rebuttal, and then we move.
Okay, all right, my last rebuttal.
We move on to the subject.
Okay, so here's the last rebuttal, right? So again, Q just said that the future is in fintech, right? So if we know the future is moving to fintech, and traditional banks are going to die, why waste capital going out to acquire a bank that's probably going to die and you don't even need those services anymore? Why not use that capital to go out and buy, say, a Robinhood, who now puts you in that conversation with Square and them, and you can now diversify your line of business and look to offer branch services that way. That keeps you in the game with the Squares and the PayPals. So again, thinking forward, I would love to see Goldman Sachs go out and buy Robinhood at this cheap valuation right now. They no longer need the retail branch banking that we so-called talk about, because they're starting to get, let's think about it. How many users does Robinhood have? I believe 80 million. And what generation are those Robinhood users? I'm just saying, man, don't sleep on Goldman Sachs, brother.
Good shit.
My man.
All right. That was hot. It's in Hot Take Thursday. So we're going to cool it down. We're going to cool it down a bit.
I mean, everybody take a water break. They need a hydrate for that.
We're going to cool it down. And now we're going to get into one of my favorite topics. We're going to talk about some semiconductors. So you all know that there's been all this buzz about the shortage. We know that when supply is low, demand is high, prices go up. So what would be some things that would alarm you all if it were to happen in the chip sector as far as the shortage goes? Like, what types of headlines are you looking for when it comes to chips?
I think that for me, what I'm definitely looking for, I'll give you the good side and I'll give you the bad side. How about that? Mm-hmm. So in the good side, I'll start with actually the bad side. The bad side says that essentially that we escalate with China, and honestly that there's going to be that type of issue where the trade war continues on and the war wages on. The other side to that, as well as when we think about bad news, is, honestly, we find out that this is actually going to get a lot worse than before it gets better. So which means it takes us into the second half of 2021. And then really that's kind of it, or in the sense that the spending itself is just decreasing, but we know that that's not going to happen. Here are the good sides to it. We know that the demand is there. We know that the supply is ultimately in shortage, but demand is definitely high. Typically what you see when you're coming out of like recessionary things is you see demand starts to spike, but yet at the same token, supply inventories are pretty low. So that's an easy sign that says, okay, hey, we're moving out of some of the recessionary areas. I think that one of the good spots would be to find out that some of these companies have already been working on mitigating a lot of these issues with supply, and ultimately they're not missing a beat. And I wouldn't be surprised about that. Like, for example, we just saw with AMD on, I think it was yesterday, where they just announced their graphics card. I think it was the 6900 series. And I think that within 15 minutes, that's sold out, like across the board. So if you put that into perspective, then that lets you know that they're going to have a great quarter and that the demand is still there and it's not going anywhere when it comes to a lot of these chips. Then on top of that, the thing that also excites me is the fact that I'm also seeing other industries outside of the traditional tech space, like, for example, autos, That's very huge. When we see, like, for example, Ford and GM having to slow down their production or halt their production because of the fact that, okay, hey, in Tesla too, that they have to halt some of their production or delay some of their production because of the fact of a chip shortage. That lets you know that the demand is there. One of the things I would be on the lookout for is to see if they also raise their profit margins, especially looking at a company like AMD, if they can increase their profit margins because of the fact that they can raise the price a little bit, and then that boosts up their profit margins to subside that. And on top of that, it would be interesting to see exactly how long this can last. My guess is this goes all the way beyond 2021 as it pertains to the pent-up demand, and it takes us into the first half of 2022.
Already.
Oh, does anybody else have any thoughts here?
I'll follow you up on those semis. You bugging.
Oh.
Right.
So this is just something of interest. Okay, so you know how Microsoft just released their pretty awesome project, Microsoft Mesh. When is that getting factored into, or when will that be baked in to this stock? Because we know we had pullback with Microsoft. I didn't see any action yet. So what is the deal?
I think we saw some of that early action, and correct me if I'm wrong, guys. I think that we saw some of that correction earlier on today before the market kind of just said, okay, hey, J-Pal, we give up. I think that Microsoft was up probably close to 2% or almost 2.5%. And then essentially it just tanked with the rest of the market. But interesting thing, if you look at the silver lining of Microsoft, go and check it how they closed today, because they didn't close beyond, I don't even think they closed beyond 1% down. And that's a very good sign. I think that honestly, it's a very good product. I think that this is the next generation of going beyond the HoloLens, which puts it into the consumer, as well as mid to small business, as well as even enterprise. So now you provided a pretty dope solution, and they're going after the Facebooks of the world. But you know, now that we've seen Facebook's product and now that we've seen Microsoft's products, there's another person and there's another company in which that the world is waiting for, which lets us know. I'm just going to stick to that because I think I was right, and I'm going to pass it on to either Q or Zay. Go ahead.
I will say, I think when you have behemoth-sized companies the size of Microsoft, that some stuff gets baked in a little late. I think they always kind of get credit later than they should because it's not exciting. You expect them to be great. It's kind of similar to LeBron last year. I think he led the league in assists, right? And it's like you don't really talk about it because it's LeBron. Like Bron's supposed to do everything. I think they kind of get that same treatment. So I think that stuff probably to me won't be fully integrated from a thought process wise until after earnings quarters to start to kind of get excited about it and they start talking about numbers and projections and give guidance and things of that nature that really start to ramp up the anticipation for what it can be. I think that's for those kind of names when you talk about the gigantic mega cap stocks like that you need to start generating interest, right? What's the marketing behind it? You know, what are analysts thinking? I haven't really seen too many analysts talk about it, which lets me know, from an institutional level, maybe there hasn't been interest yet, right? Because there's a lot other things going on right now that I can name that haven't drawn the spotlight to it. So I think when you start looking at those names, you tend to have to let things play their stories out. I mean, we look at Apple, for example, flawless quarters. I think I posted something. They did $72 billion in just the App Store, and the stock's been trading sideways. And so it's very frustrating for the astute investor, right? But that's not priced in right now. But in the future it will be, and that's why you're holding the shares or you're invested in the company. So I think the same thing with Microsoft. I think you give it time to build up anticipation, give some guidance, give some headway to what it's going to be, because as people don't know, they heard, but they have to see sometimes. And I think it's baked in after earnings.
Zay, did you have anything to add, or he's like
well, I'll say this. The one thing I'll add is when you look at big tech and you look at Apple, Microsoft, Google, Facebook, Netflix, and we look at this past correction, or we look at the current correction, and out of those, who held their own the best? First, number one would be Google. If anybody hasn't looked at that, might want to take a look. Then number two, Microsoft. I think when you hear analysts talk about, okay, the big cap tech, which ones are fairly valued or which ones have room to continue to grow. I think the two that most people sleep on is Google and Microsoft. So it's going to be that one when it wakes up, you're going to wish you was in Microsoft.
Yeah, and pretty soon, Zay, if you would also possibly grace us in a little bit. I feel like people always see my charts, but it'd be dope if we can kind of go through that chart session that you did a little bit earlier. So I'll let you go ahead and prepare your chart, which is on the NASDAQ. But interestingly, a lot of folks is and this is going to lead towards something pretty cool because the market has kind of gone into correction mode since I think it's February 16th. And then here we sit at, March 4th. So when you think about it, that's less than 30 days. And if the market has gone down this far and ultimately it's impacted your portfolio this much, a lot of times the reason why we're, having these types of conversations for each and every single one of you back at home, many of you are sitting in positions where you have probably anywhere from 280 days to all the way out to about 762 days or even 830 days. So when you put that into perspective, 30 days worth of activity or 30 days worth of red versus what else is supposed to come. And if this correction has come forth this fast, then imagine what that rebound is going to look like.
Yeah. So. And I will say, y'all look and see how many days you actually have left on your trade. Start looking at data. Don't get in your feelings. Just look at the data and don't make it mean anything. Just stick to the hardcore facts. There was someone who had mentioned that they were down by, they're saying they were down by 80 or 90%. And they're like, what do I do? Do I just let it ride? And that's what they want to know. There are cousins that have less than or have more than 50% negative loss in their accounts, and they just started. What words do you have?
If you're long term, then you just got to stay the course. I mean, you just got to stay within the position. I'll give an example. One of the positions that I traded in a different account was a January 2021 position. And I got this position back in 2019. And of course, 2019 gave me a great run. And then, of course, 2020 came around, and then we saw what took place from late February to March. And then essentially from there, it's just all right, well, where do I go from here? Well, I just stayed the course and I stayed in the position. And then when I exited around July, early August of last year, I mean, honestly, that position had gained me 2,800% return, and take into consideration the volatility and also the run and spike that we had in 2020. But it was because of the fact that I stayed the course. Now, my position itself had gone down by probably about maybe 40 or 55%. But yet me staying the course and not giving up something in which that took place in the early part of the year, which I knew that honestly that there was going to be some short-term pain in the early parts of the year. And then essentially what we expect to go through during the mid-year, then honestly, I was okay. And of course, you have to look at certain indicators and everything else. But when I saw that, and typically taking to my seasonality factor, I already knew that even without the recession or without COVID-19, when you think about it, April, May, June, July, those are pretty dope months in which that technology typically does its damage. It takes a break around February, March, and then essentially wakes up around late March to really early April, and then literally goes on a brilliant run. Q, can you speak on that at all, or you want to talk about the seasonality?
Well, I want to talk about touch on some of this stuff, put some thoughts on what you said.
Okay.
I think your due diligence has to control your conviction, right? If you've done enough due diligence, then you should have a high level of conviction in the names that you purchased for your portfolio. And you understand, okay, if I'm in this position, I was going to be in it for a year, 2 years, right? So whether the position does like this, whether it's like this, down, you have a date or a target time. So it doesn't matter what the ride. We've all been on airplanes where it was a little bit turbulent for the first 15 minutes and it was a smooth flight, right? And I think we have to look at it in that accord, because from a social standpoint, if you have a collection of sneakers, let's say Yeezys and Jordans, and one day Kanye comes out and Jordan comes out, hey, my shoe's worth $10 now. And everybody goes, okay, that's a norm. But you know the value of a Jordan or a Yeezy on the resale market, right? I think everybody will run to the stores and try to boatload all the Yeezy and Jordan because they know when the value comes back that they're going to be better off.
Yep.
And that's because you have a conviction, a social conviction to, I call it social equity, right? Certain name brands give you a level of social equity. So you have a conviction to that because you know in your heart of hearts, there's value there. I think when you look at the market, you have to have the same level of conviction, but your due diligence has to match your conviction, because if it doesn't, you're going to have a hard time stomaching the bad times. And that means the foundation of your investment home was built on shaky land, and any storm can break it. And so to touch on market seasonality, I think also to touch on the fact that, again, if I'm looking at what is in front of us right now, we have a vaccine that's ahead of us that's going to allow people to get out and spend money. We have money that's going to be infused. And then when you talk about the spring and summertime, that's travel and consumers' discretionary time. And so I think about the names that we're all invested in and who stands to gain from the momentum that is to come. And if you understand that it's a lot easier to not go crazy during these serious red days, or again, a lot of these institutions or things that you're looking at daily, they are for entertainment purposes. They sell ad time. They have to make it dramatic or thematic, or you would not watch it. If you're not watching, they can't sell ads and they cannot make revenue. They do not make revenue off of how you trade. Just understand that from the jump. They make revenue off of how you react. And if you don't react and you stay silent through a storm, you're going to be better on the other side of that rainbow.
And I'll just add to that personal experience. Cyber, CIBR, the cybersecurity ETF. I think they had a short dated chain option, and I bought at the time the longest dated option they had, which was February of 2021. Okay. And I bought it in September. I didn't necessarily like buy the top, but I bought it during that correction. And literally I was down 99%. But I just was like, I figured, cybersecurity is going to have its moment. And if anybody recalls, to the end of the year, when that situation happened with the hack and cyber went on that run, and good thing I kept that call, because literally I was down 99%. But when I end up, getting out of that trade, that I end up cashing out that trade at 600%. So if you're going to have those bumps in the road, but I know, and to your point, we've gotten questions where it's like, I'm down, 80, 70%. Can it bounce back? Absolutely. And just to, add more sauce to it, think about it. If you have that long-term position, and we've been told that on a conservative mark, 500% to 1,000% is kind of what you can average. If you're only down, 99% and you get 500%, you still end up with about 300% in gains on the low end. And if you get to 1,000%, you end up with somewhere around, say, 700% or something like that. Mm-hmm. So, I would just say keep that into perspective as far as when you're starting to aim for those, 10x and 15x. You're going to have days where you go down 50, 60%. But in order to reach 5, 6, 700%, you gotta live through that a little bit.
Yep. And it's like you ultimately get better at these things the more that you start to see the data. And I think that what you can show the folks can actually kind of like put it into perspective. We kind of like did this. We actually kind of did this earlier today. So let's run them through what we did today.
All right. So you want me to use the NASDAQ, right?
Of course. NASDAQ is where we live.
All right. So hopefully the good people can see my screen. All right. So this is what we walked through earlier. And this was just something that I did to kind of help put things into perspective as far as a drawdown goes. When you think about a correction and a drawdown, most people are like, well, how long does it take? How bad can it get? What's the worst? And, we went through earlier, what is a correction? It's approximately anywhere from 14 to 21 days. So just for reference, guys, we have 3 reference periods that I can easily point out on this chart. Now, just for context, this is the NASDAQ. This is a weekly chart, so meaning these candles are weekly candles. So this is a week's worth of movement. I typically like to chart on weekly candles because when you hear the news or analysts talk about the market, it's mainly from a weekly perspective. Oh, the market was up 1% this week, or it was down 2% this week. They don't really talk about everyday movement. They kind of just say, okay, here's what happened this week. Here's what we're looking for. So to put things into perspective, we have our September pullback or September correction. If I just go from the top and I go to the bottom, that gives us 14 days, and I might need to zoom in if I can. That would give us 14 days in a correction of about 11.72%. If I do here, so this was what I call election correction. Same scenario. Let me spread this out some so y'all can see. So if I go from the top to the bottom, again, 14 days, roughly 10%. If we go to our most recent correction, if I go to the top and I go to the bottom, well, would you look at that? 13 days, 11.5%. Now, the other thing I would like to point out is, look what usually happens. Now, this was kind of small, but you had a nice bounce going, recovery here.
Yep.
And I'll move this out of the way so you can see that. And then you had a heck of a bounce here that week after the election. So, when you put that into perspective, and I'll let Mark elaborate on a little bit more, but you can see like, okay, this is typical of a drawdown for the NASDAQ. And the other thing I want to point out is we have some people calling for the NASDAQ to go down further. I think something to keep in mind is when you're in a bull market, you can see that when the NASDAQ typically corrects, it's correcting more to its basis line, more so than this is my 50-day exponential moving average. Yep. I have yet to see it come down. So for me, in my assumption, I feel like we are pretty close to the end. So
should we show them some of the magic that I taught you the other day? That baseline.
Okay.
You want to show it to them?
We have to do that on the SPX though.
Okay, that's fine. Let's do it on and for the folks at home, let them know what SPX is.
All right. So the SPX is the S&P 500 index. As you can see, we was actually on it practicing. So yeah, it's the S&P 500 index. So this is the top 500 companies on the market. This is another market that typically, I like to look at as a baseline or just something to watch as far as the overall market goes. Now you can see, again, correction here, another correction here, and another correction here. So it's a similar pattern, i.e. 3 black crows, if you know how to read candlesticks. But the trick that Mark is showing us, so if you want to get a gauge for, and I'm dragging out the chart because I want you guys to see, this is 2022. If we draw a simple trend line, and I can start from here, and I want to make sure that it just follows here, and I just drag this until I get to well, actually, hold up, because I'm gonna have to do like this. 2022, make this a little bit higher.
Can we start it from further base back in like March, actually?
Yeah. I mean, if we do that, that's going to make it even steeper.
Okay. Well, then let's start. Let's actually take it from, let's say, that April or that June then.
All right. About right.
There we go. Yeah.
Yeah, there we go. So that's more on trend. Yeah. So, all right. I'm going to be a little bit conservative here because.
Okay.
And just go to about 49.50 or so.
This is going to be some magic, y'all. Now, this is some magic showing you some gems presented by Zay today.
All right. So based on this trend line alone, and we talked about this as far as like end of the year price targets, right? So on a bear case scenario, I would say we could see the S&P end up somewhere around 43 to maybe 4,200. Base case, maybe 4,500 to 4,800. And if we're being really, really bullish, don't be surprised if the S&P touched 5,000 by the end of the year. That's based on this trend line alone.
Now, what's some interesting things that we notice about this trend line here? Like, because if we notice, like, because we just drew a trend line based upon what we saw from Yeah, we saw the trend line. We drew the trend line from pretty much the base of every single time that, and kind of like link them up along that. We can keep it in the candles region. But notice that every single one of those parts in which that it has touched, those are pretty much corrections that the market has taken.
Yep. Bounced up.
So every single one of those that falls online are all on par, or in the words of our wonderful Jolene GC here, on brand. Each and every single one of these corrections falls on brand with this trend line that is still going towards the upside.
Mm-hmm.
Interesting. Okay.
Yeah. Very.
Thanks, Zay.
Thanks,
My guy.
Dave. I'm looking at the time. The time is 11 after the hour. I do have some announcements.
Okay.
Well, one, I do want to say that, you know, if you have watched the starter pack, you know that there was a stat that was shared about the 98% who have lost 100% of their money, and ways to be in that 2% that does not lose their money is really sticking to the plan and not having FOMO, or using FOMO as in fear of missing out, as a strategy. And I know it looks bleak for some of you. But again, you've heard and you've seen the charts now. You've seen that upward trend line. So, you know, you can sell. Like, no one's telling you not to sell. You can do whatever you want to do because you are the expert of your portfolio. We're just letting you know that based on data, there are, and trend lines and all that, there is opportunity still. And if you have not calculated how many days you have left on your contract so that you can put things into perspective, then do that immediately, ASAP. No Rocky. Okay, so some of the announcements that we have now, this is one for, and I just wanted to share this because we have, some of you may know that one of the cousins, Alita Miller, she lost her husband, who was the father of her 3 children, just last week. And they're making funeral arrangements, and they're getting those together for Saturday. If you are a part of the Come Up Cousins, there was a link in there if you feel so moved to donate to Alita. I just want to say personally that our sentiments and high vibrations, prayer, and love goes out to Alita and her family, and especially her 3 babies right now. So I just wanted to put that out there because I know that she is, you know, grieving right now, and it's tough enough to be grieving about a market. Like, when you think about perspective, like, grieving about a market that's nothing. We're talking about actual lives here. So I just wanted to put that out there, and thank you, Tebow, for posting that link to donate to Alita. There's also her Cash App as well. So Alita, we love you. We are keeping you in our thoughts and our prayers, and just please give the kids a hug for me.
And me.
All right. So with that, first of all, thank you, Q and Zay, for making the Hot Take Thursday extra hot and spicy with the heat. Y'all are.
Sounds like we're gonna have to have a round 2, or like.
I think, you know, it should be a reoccurring theme. You know, when somebody pops off in fintech, y'all get on here and talk your talk.
You know who I want to see?
Who?
I want to see Ashlyn versus Tebow.
Okay.
Ooh.
Yeah. Okay.
What companies are you thinking? Because, you know, these two have their companies. Well, you know who Tebow's hilarious. You know who Tebow has, but, you know, I don't know. We'll see. Yeah, so thank you both for being on the show today, and your contributions, and taking the time out to, you know, give the cousins something that they need. And that was reinsurance, inspiration, motivation, and, you know, your brand of stick-to-itness. So thank you both. Truly
appreciate y'all for having me on. And Q, always, brother, you know, You bring the best out of me. You bring the best out of me, bro. So my bad.
Iron. I love it.
But yeah, you know, I always love a good debate with Q. He keeps me sharp on my toes, you know.
100%. And I think that that's kind of dope when we can actually have those kind of debates. Go ahead, Q. I'm sorry to cut you off.
Oh no, I said it's always a vibe, man. It's always dope. You know, Zay's my brother, so you know it's the brotherly love whenever we go at it. So it's always love, man. I wanted to give the cousins one quote, right? I heard this quote the other night, and I thought it was really, really dope.
Yes.
As an investor, right? You cannot control the wind, but you can control the sails. And I think that is appropriate for what we're going through right now in the markets. Can't control the wind, but control your sails and sail yourself to some profits.
Yes. Oh, and Q, you posted something on Twitter today too. That one quote that I like. What do you remember?
Yes.
That was a good one.
All right, so I heard the quote. I forget his last name is Graves. I forget his first name.
I think it was Dennis.
Might be Dennis or William. Something last name was great, but I heard it the other night and I thought it was really dope. And that quote is, "Bad companies are destroyed by crisis. Good companies survive them. Great companies are improved by them." And so I think if you understand that you are invested in great companies, then you understand that they will improve through this crisis. And on the other side of it is a lot more gains than there is pain.
And then we have some cousins asking about y'all's Instagram. So if you can just shout that out right quick.
You want to go first, Zay?
I'm actually typing it in the chat, so I'm multitasking.
Oh. Oh, well.
Okay, I see he put it. So go ahead, Q.
Mine is Mr. Wall Street. I think _. I don't know. Somebody got to type in the chat. I forget all the time.
I got you.
Mr. Wall ST.
Somebody got to. I'm terrible with that stuff. Okay.
It's like Mr. Wall Street.
I'm horrible.
Yo. So, all right. So, Zay, any last words of wisdom for the people?
You know, I think my words of wisdom is this is why we buy time. I think, you know, ultimately, you know, people have been hitting me up like kind of nervous about their positions. And my first question is, well, what is your expiration date? And I think it's been said multiple times tonight is keep track of how many days you have left on your contract. Don't let literally 14 days of a correction scare you out of something when you have over 365 days left in the contract. So I said it before, I'll say it again, patience and, you know, just stick to the script. And ultimately the correction we hope is ending very, very soon. I won't even say hope. Based on data and based on previous trends, it seems that we are close to a very end. So just hang on.
Wait, y'all, I'm so sorry. There was this question and he needs to get this question answered because I told her I wouldn't forget and I hella forgot. Okay, so one of the cousins was reading about how Warren Buffett believes there may be a crash in the bond market similar to the 80s. And she wanted to know real quick, what's your hot take on that? Anyone?
Q, I'll let you take it.
I mean, what are those? No, I think that.
Okay, that was the shade for Thursday. We hadn't had any yet, so thank you, Q. Thank you.
No, I mean, I think that market is a lot bigger and more expansive than people think. I think equities is always the more popular because it's more transactive. But if you look at the scope of debt that's drawn and how much debt is raised in the bond market, I don't necessarily agree with that take. I think there's too much money there for it to crash or have any kind of bubble or fall. There's a lot of companies that use debt or other people's money to fund their projects, and it's normal, right? And that's just talking about top level corporate bonds. You're not even talking about your junk bonds, which some have, you know, maybe C ratings, but trade as a A level or AAA rated bond. So I just think there's so much money in there. If you're worried about a crash in the bond market, then you should be petrified in this market if that was the case. And I'm not petrified. I think we're headed towards much clearer skies on both sides.
All right.
He said what he said.
He said what he said.
I agree.
All right, it's 6:20, y'all. Jolene has to eat alkaline food, so let's.
Hey. All right, y'all. If you like what you saw today, go ahead and hit the subscribe button. And on top of that, be sure to hit the like button and be sure to follow Q at Mr._Wall Street, as well as Zay. You can find him at First Gen Wealth Building. That's a lot. And on top of that, you can find us. Well, you know where to find us. But also, if you didn't like the video, that's okay. I mean, hopefully we can do better. Just exactly. Thank you. Go ahead and hit that dislike button and give us your feedback. If you want to be in the know for the next video, hit the bell. And we are excited for next week because
Hey, it's about to be some smoke, boy.
Yo, we said that we were going to bring some smoke this year, and we said that when we reach 50K, then ultimately the game changes, and the game has changed, and it's going to keep changing. So buckle up because we got a lot to share with you guys this year, and on top of that, to take you on some pretty cool, awesome journeys. So stay tuned. But until next time, I'm Mark Monroe.
Go ahead, Zay.
Oh, Zay, your cousin Tudor.
The big cousin, Q.
Oh, it's my turn? I'm just kidding.
Oh, my
and I'm
God.
Jolene GC in the place to be. Hey.
And next week, we will be talking with Kathy. This has been Hot Take Thursday. And we will see you all in the next one. Have a great weekend. Be safe. And at the same token, good luck to LeBron James and his team for the All-Star game. All right, y'all. Peace.